Dave here with another video. Today I want to talk about Roofstock, but from the seller's point of view. Let's get started. If you're not familiar with what Roofstock is, it is a platform that you can basically go out to and you can buy real estate homes that have already been rented out, okay? Now, not all of them have been rented out, but majority of their houses have been rented out and they're being sold by individual people like me or other investors, okay? So that's pretty much what the platform does. So Roofstock does collect a small fee in this transaction for transacting it by putting it on their website, help do the analysis on it, appraisal. They help do and find management if you need that. They also help with the whole transaction of this being sold as well. So they do collect a fee from that. That's how they make their money, okay? I'm looking at the website here, which we'll look at here in a minute. And I noticed that they're doing some new stuff as well because I sold a house on there last year. So I have a little bit of knowledge about the seller side. So let's go ahead and just take a look at the website. If you have not seen it before, and we'll take a look at it, okay? Okay, so we're looking at the Roofstock website here. This is the main page. And you can buy, you can own, you can sell. Build wealth through real estate, view properties. But the weird thing is that this is new down here. This, just launched, new investment opportunity for accredited investors. Click here for more information. That's been popping up a lot lately on various places. I've come across a number of places. Grant Cardone kind of does something similar to this. Marshall Riddick does something, well, they're actually supposed to be doing something similar to this, but there's another fund that I learned about off of Bigger Pockets, so they're all doing it. Fund that flip, they all have something that's similar to this, but they all require you to be a accredited investor, okay? So if you're not familiar with what a accredited investor is, that really means that you need to be somewhat rich, in so many words. In order to be considered an accredited investor, you need to have either $200,000 of income for at least the last 2 years, and you plan on having that income over the next, year. Or the other option is you can have $1 million in net worth, okay? And that could be combined with your spouse as well. So that's not bad, right? 500,000, 500,000, blah, 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 right? Okay, so for somebody like me that's single, becoming an accredited investor, I do have $1 million net worth, but I tried to become an accredited investor. It's not easy. You try to prove where your money's at. If you have it in an LLC, because I have a lot of money in an LLC, they don't count that, okay? At least one of the companies that did the accreditation verification company that I try to use to invest with Fund That Flip, good luck. I got a lot of money into an LLC. No way. Anyways, that's just a side note there to talk about a little bit about the credit investor, because you'll see that popping up in a lot of places. And it really that's not a knock on any of these places that has that requirement. So don't be all mad at, any of these places like Fundrise and Roofstock or any of the, Grant Cardone or any of them, because it's not their fault. It's the Securities Exchange Commission, so they're the ones that put that requirement on it. And honestly, it's kind of stupid too. It really doesn't mean anything. It just really hurts the little people, right? Anybody that's trying to get into investing, it's like, here, look at this. They want you to be an accredited investor and you can invest $5,000. Why? You know what I mean? So Grant Cardone does have a fund that doesn't require you, and I don't invest with Grant Cardone, by the way, okay? I'm not against it either. It's just I'm not investing with him right now, or I kind of looked at it, but I'm not investing with him anyways. I just want to make that clear. $5,000, but so the accredited investor thing really hurts people that are trying to get into investing, and it's kind of sad. So, but anyways, let's go and move on to Roofstock. So Roofstock, let's just kind of give you an overview of what they have on their website here. So here's a bunch of properties on here. You can just, filter by list price, monthly rent, location. I think you can even filter by cap rate and all that stuff as well. Having looked at this site over the last couple years, a lot of the houses are in depressed areas, right? That got hit really hard. you know, Michigan, Ohio, and I'm not knocking those places at all because you could get really good deals in those areas. So anyways, let's take a look here. We got, you know, here's a house here. It's in Tennessee. Tennessee is pretty hot right now, especially Clarksville area and all that. Nashville and Knoxville. Memphis, I'm actually a lender in a home in Memphis right now as well. But anyways, this is kind of just an idea of what this site does. You know, current rent $850, current rent $700, you know, current rent $1160. You know, if you click on any of these, it kind of gives you a little bit more in-depth look at the financials. You know, if you basically down payments 100%, which means you're just going to pay outright for the house, right? And that's how they're coming up with these numbers. So, you know, cap rate, they kind of give you what the appreciation number is and all that. But they kind of, you know, lock it in, or I wouldn't say lock it in, but they kind of, you know, not mislead. I wouldn't say mislead, but, you know, it's a 5-year return. This is what you're going to get, right? But if you look at the yearly, it's, you know, they're counting the appreciation in there and all that, and that's kind of, you know, not really guaranteed, right? So, you know, when you're looking at houses on here, if you're looking at a house on here to buy, make sure that it's rented out, okay? Because I have seen some houses on here that are not rented out, and that's kind of one of their things, you know, to basically, that's what they call it, Roofstock. You buy the house, it's turnkey, okay? It's already rented out. It's probably already had the repairs done to it to be able to rent it out, okay? It's either been repaired, semi-repaired, semi-flipped, or been flipped, okay? So in my case, we flipped the house and we put it on there, but I'm gonna talk about that in a little bit, okay? So yes, you know, kind of look in the area you want to find a house. You know, Jacksonville is kind of a hot area. I don't know, you know, I'm a lender in a couple houses there as well. And Florida is kind of hot, you know, depending on areas. There is some, you know, hit and miss areas there as well, but there is some investing going on in Indiana as well. Texas is a good place as well. You're usually never going to find a house like in California or, you know, Colorado or any of those areas really on here. This site is kind of more for, you know, houses that you can afford, that make an income, that you can still, you know, make an income, right? So let's take a look at the rent on this one. This one is $1160. Which is about almost $14,000 a year. And it looks like expenses are $4,300 a year. So net cash flow is $7,200. So let's go ahead and talk about the reasons why a seller would want to put a house on Roofstock. But before I say that, let's just go ahead and mention the fact that if you are a buyer, you will be dealing directly with that seller. All right, so negotiations, you know, inspections, appraisals, termite inspection, you're dealing directly with that seller. You're not dealing with Roofstock. Roofstock is not making you fix anything or anything like that if it comes up in the inspection report. So that's just one thing to note. So let's go ahead and tell you the reasons why we put a house on Roofstock in 2018. So earlier in 2018, we went ahead and found this project. It was already halfway flipped by the seller, and we said, okay, let's go ahead and buy this property and let's go ahead and finish the flip. So part of the deal is there was a bunch of supplies, windows, paint, electrical, flooring, and we were going to use that stuff to help us finish the flip, all right? So we had counted on about $9,000 or so that we wanted to put into the property in addition to that stuff. We didn't account for that. So when we purchased the property and we wanted to go ahead and start the flip, that stuff was missing, gone, ripped off, stolen by the previous owner or seller. We're not really sure. We're not really sure why he had to stop on the flip either. We had to come up with about $7,000 to $10,000 more than we anticipated. So we were looking at other options at this point, you know, selling on a traditional route, going through a realtor, so, you know, 6 to 10% by the time we close. That wasn't probably going to cut it. So we looked at doing Roofstock, which, you know, has a fee of about, what, 2% or so, 2.5%. That's certainly a lot less than the 6 to 10%. So we put a property on Roofstock. So once the property was listed on Roofstock, it wasn't within just maybe a few weeks or so, we started getting multiple offers, all right? So we did get a few lowball offers as well, okay? So I would highly suggest that you do not do lowball offers. It's not good practice all around. If you're serious about buying a property on Roofstock or anywhere for that matter, do not do a lowball offer. You're gonna alienate that seller, and that seller is not gonna deal with you. They're not gonna do a counter offer. All right, so I just had a lowball offer on my rental property that I sold a few weeks ago or so. You know, it was $40,000 less than what I was asking. And later that same exact day, I got an offer for more than what I was asking. So do not lowball offer. That's just bad practice in my opinion. Nobody likes to get a lowball offer, and that even includes things on Craigslist and whatnot. You know, so a brand new item that's in the package. We're asking $100 for it or whatever. And you're gonna ask them, hey, that's $50 for it. Cash, right? Like cash makes a difference. So just don't lowball. So if you're serious about buying a property on there, make a reasonable offer on it. And with that, what I would say is if you are definitely going to buy a property on Roofstock, by all means, make a offer less than what they are asking. You can get away with it. That's fine, but just don't lowball, okay? So we did get several offers on this property. We found one offerer specifically interested in buying the property. And we went back and forth about 3 times or so. Ultimately sold, we had the house listed for $95,000. We ultimately sold it for $93,500. So ultimately, in the end, we did make money on this property. I think we made about $14,000 profit on this property. Our plan was to make about $26,000. So, we did make money. We got to collect rent while we were waiting to get offers and to sell the property. So that kind of gives you a reason why a seller would have put a property on there. They're going to save that 6 to 10%. They get to collect rent, right, while they're waiting to sell the house. That could bring them potentially from a red situation to be either break even or potentially even into a profit zone. Okay, so that actually helps significantly. So people are buying houses on this platform, okay, and they can get good deals on this platform too, because it saves money for the seller because the fees aren't going to be as much as the 6 to 10%, right? So they're saving money. That way they can either collect more profit. The buyers are going to get a better deal because they're on the site and they're going to save money because everybody's saving money here, okay? So that's my spiel on Roofstock. So I certainly hope that this video helps you out. If you have any questions, go ahead and comment below. Go ahead and like and subscribe, and we'll see you in the next video. Thanks for watching.